So the famous question is, do you play the gap to the downside? Do you play the gap to the upside? Or do you not play the gap at all? The S&P recently has been forming a lot of gaps that has not filled, going back all the way to the start of the 2022 rally from the October lows. And are we about to see another gap be left on the chart to then be cemented in history as one of those we have not filled? And or do we play it to the downside to play that gap fill, to play the rotation down maybe to the 50 or some degradation, having that traditional pullback around this time? That's what we're going to be trying to answer today. We're going to be going over several factors that are going to factor into that decision, whether you go to the upside or you go to the downside, or you just simply sit it out. Thank you all so much for tuning in. Hope you're having a wonderful Saturday or Sunday, depending on when you're watching this. And again, hope you're having a wonderful start to your week. So first of all, let's talk about what the S&P did for the week. We have a monstrous week for the S&P, basically closing up above where we previously were, having a nice range and a rotationary period that we're going to be talking about. So looking at this, the gap is our rotation. So it sets up a pretty clear, distinct line for us, whether this is going to be bullish or bearish. And again, we have more risk to reward to the upside versus the downside. So we're going to be talking about some crazy things that are developing in the market. But first of all, I do have a question for everyone that's watching. Are you satisfied with your portfolio's performance? Has this year been good to you? And if the answer is no, then I had a similar experience before where I just kind of went into a tunnel and my portfolio did poorly. So if you guys want to expand your knowledge, I highly recommend listening to different sources of information. This channel could be one of them. Look at contrarian views to what you believe and then kind of just get different viewpoints. And if you're interested in doing something like that, we do have a Discord that you can join in on, completely free, where you can interact with us on a more personal level. And also, if you guys wouldn't mind hitting the subscribe button and having bell notifications on, you know when we go live for our live streams on Tuesdays and Thursdays, 7 p.m. Eastern. And as always, if you guys wouldn't mind hitting the like button, it tells YouTube you like this video and pushes out to more people. But enough of that. Let's talk about where we really need to be paying attention to on the S&P this week. And then we'll get into the whole Bitcoin, IWM, Russell. It's going to be a fantastic time. So first of all, the gap is going to be a point where it was our previous week's resistance. So now it should be support. Therefore, if we play the gap to fill, we actually have to break 536.89 before we actually say it's bearish. Filling the gap actually would be a bullish play because we are retracing, forming new support, bouncing off of previous resistance, and that would surmise a bullish continuation. Similarly, how we basically came back in this area and did something similar. So looking at this, I'm going to be saying, hey, 536.89 is going to be a buying opportunity until we break 532. If we break the whole range of the week, then obviously this is where alarm bells should be going off that, hey, the pattern is completely changing. This is now considered possibly a blow off top, and we have to reassess our situation. But until then, I'm not going to be talking about the bearish situation because it makes no sense to talk about it until there's actual evidence that it's coming to fruition. Now, if we jump over to the NASDAQ for a second, we can clearly see that the NASDAQ has a similar pattern to the S&P and thus actually has more downside potential than upside potential because the NASDAQ basically closed right at the weekly high. So any ticks above would be considered a breakout. Now, that puts into context of if this continues, that shows strength. If it fails to hold, where we're below the previous week's high, then we start questioning, does a NASDAQ gap fill signify bullishness or bearishness? It's a pretty large move compared to the S&P gap fill. So therefore, I'd be saying I don't want to see the NASDAQ fill the gap. I want the NASDAQ to come to the gap. And that price is for the gap fill on NASDAQ, 471.29. We really don't want to see 471.29 actually be broken. We don't want to see the gap fill all the way down to about the 468 number. And really, we do not want to rotate below 465.74, which was the previous week's resistance. So now that became support. So those are going to be our levels for the NASDAQ that we're going to be looking at. I really want to see that S&P maybe fill the gap completely or do a partial gap fill while the Nasdaq still holds above 471.29, even possibly rotating off of that point. That would be tremendously bullish, and therefore we could definitely squeeze higher. And we're going to be talking about something in the debate section of the video of why the bears have lost their absolute minds. And the preview I'm going to give you guys is net speculative positions. They have lost their dang minds of what they're doing. So make sure you stay tuned to the end of the video just to see that discussion about them and how it plays into all these levels. Now, one of the concerning things, now I'm going to give you the more bearish conservative side of this thesis, is that the Russell is doing pretty crappy, right? The Russell broke down consistently that 50-day moving average, so small caps are not doing so well. We see that Russell forming a weekly lower low, not closing below the previous week's low, however, closing on a basis lower than the previous week. Thus, it's just a whole lot of bearishness in small caps. Even though we got what perceived as the interest rate cuts that we're going to have this year, kind of got dampened by Powell. The market, in my opinion, is still pricing in 3 cuts. However, the small caps are kind of being a little more weary and saying, maybe we don't get this euphoric run in small caps, and they have been beating the daylights out of them. The next support for me on the Russell is going to be 195, and really, if that level breaks, we're going to start looking at corrections on the S&P and the Nasdaq. So we really need to see the Russell actually start moving back upwards, and that gives cause for concern when we also look at RSP, right? RSP closed red while the S&P closed green. RSP lost the 50-day moving average again. So now we have to see, is this going to be the story of the Magnificent 5 or 6 that's just going to be dragging the stock market up, and then our small caps going to be the ones that are just lagging behind? We're going to look at fear and greed later to kind of give us an indication of that. But if we look at some of the bigger boys, right? Apple, massive run, right? Just absolute massive run after that news that I talked about. We got Amazon still holding strong there. Microsoft, sympathy play with Apple pushing as the broader market pushes. We also got Netflix going. Tesla looking like it just wants to stay around this 50, really not doing much. We go to Goog, still staying strong as always. I remember covering Goog when it was $89 a share and now up to $173. And then Meta still holding strong after filling this gap from its downside potential and then just pushing up higher. Nvidia, after its stock split of 10-1, just kept on pushing. So another, let's see, $10 per share, which would equate to $100 per share if you were looking at the old stock, right? So some people still would have seen this company as $1,310. So make sure you guys take a look in the video because it is just a powerhouse right now trying to take on Apple's market cap. And Apple actually regained its #1 seed, so it's going to be a very fantastic time for it. And I do want to talk about Bitcoin because I've been covering Bitcoin recently in these weekend deep dives, and I've basically said that Bitcoin really flirting with this 50-day, not breaking out, fake out, breakout above 72,000 is pretty bearish, right? So now we have 2 closes below the 50-day moving average on a daily basis. And now the question is, does 50,000 come back into play? Because again, you are in a spreading wedge, which essentially is just endless bearishness, right? You don't really find support until you truly break or invalidate the pattern. And support for Bitcoin, you're going to be looking at 62,000 as the next support line, 58,000 as the secondary support line. So that's these levels right here. And really, once 58,000 goes, there's not a lot of stopping us to 50 because this was where Bitcoin just had its absolute monstrous run. You may bump at 53, but really, the 200-day is going to be your area of support, and this is just looking very, very weak on Bitcoin, especially looking at the broader market. Now, last but not least, let's just cover VIX. Still holding around this $12 price point, really just people not really wanting to give up insurance past that point, having minor spikes along the way, and then selling off going after that catalyst event, which was Powell, CPI, and all that. So looking at this, I'm going to still say VIX is looking healthy in this area because it's wanting to pick up steam. And we also have other counterparts like China not looking too hot, closing right at their 50-day moving average on Friday. So we're going to have to see how this evolves during the week. I'll make sure to keep you guys updated of that. But before we get into the discussion part of the video, I do want to cover one last thing, which would be commodities and crude specifically, and yields. So Crude looking like it has inverse head and shoulders kind of forming right here, which would break bullish if we got above that $80 price point. We're going to have to see how the inventories this week put it on track for that. We could just go sideways on crude, but it has these tendencies to kind of just go sideways for long periods of time. I don't necessarily think it's bearish yet because it's not below all the moving average on the weekly basis. We're kind of in this wait and see territory, but crude historically has broken bullish when it does these type of things. Next, 30-year pushing down lower, which is good relief because the Powell said, hey, there's going to be some rate cut in the future. However, the broader market still doesn't believe you on the shorter term, right? So the uncertainty of the 30 and the 10 and the 20 is basically saying, hey, there's going to be some rate cut between now and then, so I don't need to price in extended long periods of rate hikes, right? Rate hikes are kind of coming off the table for those longer dated yields, whereas the 2 and the 1 all showing like, hey, we still don't believe that you're going to have rate cuts in the near short term, especially with one rate cut. So they're only coming down slightly as these shorter term yields and as people kind of flee to safety with it, kind of selling off from the broader market. So we're going to be covering a bunch of stuff in the discussion part of the video, guys. But first, Fatal is going to give you the biggest winners and losers, and then we'll be back for the discussion.
So this week was the week that we had inflation and the FOMC on the exact same day on Wednesday, which we did cover here on a pretty lengthy live stream. Basically, the TLDR is that, well, inflation is coming down, right? And we could pretty much just see that with this 5-day on the S&P 500. Now, to all of you who go to the grocery store or to fill up gas in your car, it really hasn't come down. Well, according to the inflation numbers, though, it is. But that's mainly due to the fact that it's falling in areas that people really don't care about. However, markets really don't see that in the slightest. As you guys can see, because of that kind of scenario that we got on Wednesday, and the Fed also keeping interest rates the same, the S&P 500 went up almost 2% and 1.82% on the 5-day, and on Friday alone, it was flat, right? It was flat at around 0.04 in the negative. Looking at the next upcoming earnings, okay, like this is clearly, yeah, we're at a low right now. Basically, the the overall earnings season is over, and now we just have companies like Lennar, Lazy Boy on Monday. On Tuesday, we got America's Car Mart. Don't really know what that is. Wednesday, we only have one, and that's Steelcase. Thursday is the one that we have the most, where we have companies like Algamoa, Smith & Wesson, Kroger, which is a pretty big one, Winnebago, and on Friday, we got CarMax and FactSet. Again, we're just waiting now till the quarter ends and we start all over again with the banks. So here we have the S&P 500 heat map, and pretty much, guys, except for the technology sector, most of these are actually in the red. Seriously, most of these are actually in the red on the week, which is kind of interesting. So technology sector, we got over here the worst performer being none other than the company AMD, losing 4.91%. However, the best performers in the exact same industry, semiconductors, AVGO Broadcom, had earnings this past, I believe, Thursday, and they absolutely just killed it. They absolutely knocked it out of the park. Guys, they're up 23.35%, more than $1,700. Let me put it into perspective for you. COVID lows for this company, $190, if I'm not mistaken. Maybe a little bit less, but around $190, $200. If you bought this thing at around that point, let me know in the comment section below. I really am curious to know if you guys have the stock, currently after buying it at that point, and if you're willing to share even further, how much you are currently up, as well as how many dividends you get per this company. Now looking into the communications services, a lot of red here, right? A lot of red here. Worst performer was the company, well, it is the company Paramount Global, losing 15.32%. And the best performer, it is Netflix, getting 4.35%. Moving on, we got the consumer defensives, a lot of red here too, with only a few ones in the green. The worst performer in the whole entire sector seems to be none other than the company Monster Beverage, losing 8.84%. And the best performer, honestly, there really isn't that much gain over here. It seems to be the company Kimberly-Clark, gaining 3.73%. Moving on, we got the healthcare sector. A lot of red here as well. Although, however, there is a little bit of green here and there. The worst performer, by the looks of it, it is none other than the company, I believe it's looking like it's Moderna, guys, losing 7.27%. And the best performer is the company West Pharmaceutical Services, gaining 5.9%. Now, this is coming to a shock because okay, the financial sector is pretty much a bloodbath. Seriously, there's barely any green here. I don't know what's happening here. This is probably something that we'll talk with Mike during the debate portion of this. But this is concerning, especially with one thing. Powell said on Wednesday that he sees that there's no issues when it comes to the banks anymore. They did have a little bit of a hiccup last year, but aside from that, he sees that everything is fine. I don't know about that. Right? I don't know about that. So we got over here the worst performer being none other than the company PayPal, losing 9. Wow, look at that line, just straight line down right there, losing 9.9%. And the best performer seems to be the company AON, gaining 4.33%. When it comes to the consumer cyclicals, very 50-50, though it is leaning more towards the overall green. And we can see here that the worst performer, it is none other than the company, wow, okay, it is the company APTV, guys, losing 13.66%. I mean, you have a ton here that are losing. You have companies like Borg Warner, 6.5, you got CCL, 8.14, NCLH, Norwegian Cruise Line, down almost 7%. So there's a lot of red here overall. However, the best performer, it is the company Home Depot, gaining 6.06%. And this is the only really deep green one that we have in this whole entire sector. The industrials is also looking very much in the red. We got over here the worst performer. By the looks of it, guys, it is the company, this is not surprising in the slightest, it is none other than the company Boeing, losing 6.82%. And the best performer in the whole entire sector is actually a little bit difficult to find. By the looks of it, it seems to be this one, guys. If I'm not mistaken, it does seem to be this one. It is Masco Corp, MAS. I think this is the first time I've ever hovered over this one before, gaining 4.71%. The real estate sector, on the other hand, very much in the green. Wow, only a few of them were slightly in the red. Actually, only a few of them were slightly in the red. Worst performer seems to be this company over here. What is this? CoStar Group, losing almost 3%. And the best performer, it is Extra Space Storage, gaining 5.72%. Looking now into the utility sector, 50-50, I would say, leaning more towards the red. However, we can see here that these two are just kicking everything right now, man. They are really, really high right now. Absolutely crazy. And we got over here the worst performer, none other than the company, seems to be the company NEE, guys, losing 3.09%. And the best performer, it's fairly easy to know, it is Constellation Energy Corporation, gaining 8.54%. And the energy sector, honestly, I would figure this would be a lot greener. Though to be fair, oil has been falling. This is mostly in the red. Like seriously, most of these companies are in the not deep red, but fairly decent in the red, if I'm not mistaken. Overall, though, the worst performer seems to be none other than the company APA, losing 3.57%. And the best performer, there's only a few of here that actually gained. We got Occidental Petroleum. Warren Buffett just enhanced his position on here, if I'm not mistaken. That did happen this past week, up 0.6%. We got this company Targa Resources Corp gaining 0.84%, and the best performer overall, Williams Co's Inc. gaining 1.16%. And lastly, the basic materials. We get over here, wow, this is a whole lot of red. Seriously, this is a whole lot of red. Worst performer, by the looks of it, it is Albemarle Corp, losing almost 10% and 9.94. And the best performer seems to be none other than the company. You guys can barely see that one though. It is this one. It is the MLM, which you guys can barely see that, but it's 2.9% in the positive. So all in all, guys, all in all, I mean, one of the most volatile weeks ever of this quarter, right? FOMC and CPI on the exact same day. I do believe that this, and PPI as well. I do believe, though, that this upcoming week that we got coming up, I think that we're at a lull. There really isn't much of anything happening. And again, earnings is dying down. So I think we're going to see, unless we see something massive occur, right, with like geopolitics or any of that stuff, I think things will be very calm this week. I honestly do believe so. But yeah, we'll see what happens. At the end of the month, we shall get the PCE. But anyways, guys, as well as the banks as well. So you can't forget about that one. Anyways, guys, that pretty much does it for this segment. Take it away, Mike.
So before we dive into all the news, and then I'm going to talk about Fear and Greed with you because you haven't seen it yet, and you're going to die laughing when you do. My bigger question is for you, sir. Did the man blink? Did he blink at all?
Well, I mean, we had that pretty lengthy stream on Wednesday, which, by the way, if you guys have not checked it out, make sure to check it out because there's a lot of funny moments in that.
That was so
And by the way-
meme-worthy. It was so
And
meme-worthy.
by the way, speaking of meme worthy, somebody on our, in fact, let me see if I could actually find it. Somebody on our Discord actually did it. He actually put like the
Yeah,
meme.
see,
It was,
on the one that
it
we
was-
mentioned, guys, so it was the first question reporter, which his face pretty much told you everything you need to know. And I would say the second highlight was the Bloomberg reporter, which is your favorite. So make sure you guys watch that stream. Just go to the part where we're losing our minds about Powell, kind of just talking in every way, shape, or form out of his butt, telling you real estate's not going to go down. That was a slip up of the century.
telling you the banks are going to go down, which, by the way, the financial sector this week was pretty much all in the red. Pretty much. So, whatever that means, right? Whatever that
Well,
means.
but I thought banks are fine. Commercial real estate's passing.
Well, just because the financial sector is red, it doesn't mean that there's failure, but it gives a little bit of a kind of question.
Oh yeah, and we'll
But
get
aside
to
from that,
the
though-
fun financial sector in just a second.
But aside from that, what else do we got this week?
Yeah,
Oh,
but-
wait. Actually, wait. To answer your question, did he blink? No. I think he's still on track, right?
I think he cut off his eyelids, so he can't blink anymore.
Yeah.
He's
I think that
just
he's still
staring
on
you
track.
down.
Here's the thing. There's nothing that he's saying that has gone. There's nothing different, right?
It's-
Sure, inflation technically has come down, but we looked at it itemized. There is no reason for it to come down because it's falling in the wrong places.
Again, until they de-weight shelter, and if they do that, then all their credibility goes out the window. They're not going to get inflation down. Just because some categories that were, let's say, higher inflation previously, in whatever way they managed to manipulate it, you can't take a highly weighted sector, which is shelter inflation, sitting at 5, and then expect the remainder of the sectors to pull it down. It's just not going to happen.
Correct. Specifically, the used cars and trucks, right?
Well, not
That was the main one that fell.
food, gas, right? So gas prices, like I covered about oil, inverse head and shoulders. I'm like, every time, including myself, said oil was going to be bearish. Oil has this tendency to just absolutely like dogpile you and just wreck you into the next oblivion. So shorting oil is not the greatest idea right now, in my opinion. But jumping to the calendar real quick, and then we're going to dive into financials because I do want to get to that.
Sure.
We got a slew of Fed speakers this week, and it's going to be interesting because are they going to move the market? Are they going to say something that's going to tell us, hey, something like the meeting minutes are not going to be as pretty? Are they going to reignite we're not going to get 3 rate cuts this year? Because the market's still believing that. They still are so high on their own supply that they can't recognize that Powell literally came out and told you no 3 rate cuts this year, and you're still pricing in 3 rate cuts.
Right.
So what do you think? Do you think they're going to get off the bandwagon, or you think they're going to keep pushing it all the way into the next meeting?
I don't know. Right? I don't know because I have a feeling that they do want that 3 rate cut, but man, if we just get one pity rate cut like the
ECBs
did it, yes, how the ECB did it, that bro, the amount of catastrophe that's going to cause to an inflation perspective is going to be insane. I'm serious. It's going to be absolutely
because everyone's going to YOLO into it. They're gonna
Exactly.
.com style YOLO.
Exactly. You think housing prices are bad now? Oh, forget about it. A 0.25 decrease is going to cause the median housing price to go from 433 or 427 to like 600,000 instantly, overnight, pretty much.
Well, people are going to get if they're going to think they're going to front run 3 rate cuts in their mind. It's not going to be because people listening to this are going to say, well, no, it's not going to do that. Yes, initially won't, but people are going to front run the 3, 4, 5, 6 rate cuts in their minds, as they always do.
Refinance. So that way they can always just
yes,
refinance
it's the
that.
same way like 08, where, I can just refinance when my teaser rate expires. Yeah and no. If the principals go up, yeah, you can't refinance. If the interest rates stay the same, you can't refinance because housing values go down. Again, it's the total net that you're refinancing. You're not just refinancing the net interest rate. But enough about housing till we go blue in the face. Tuesday, we got core retail sales. I don't think it's going to do anything. I think the news this week is just going to be meh. We have Atlanta Fed GDP now, 3.1 previously. They're expecting flat GDP. I say it's going to come in lower. That's just my things. We got Collins, Kugler. You got every Fed speaker imaginable throughout this week. 20-year bond auction. That should be interesting considering the spreads we've been seeing on these bond auctions are just getting worse and worse and worse. Wednesday is a holiday, so no trading on Wednesday, Juneteenth, even though how much you could enjoy or agree or disagree with that holiday. It's now a bank holiday, I believe. So therefore, the stock market will be closed. And then on Thursday, just, standard job and home starts. So we're going to see how the housing market is doing. They're expecting basically flat home starts. Again, this dropped pretty significantly last month. So we may see a couple revisions there. Just keep an eye on that. Crude oil, as always. And Friday, we got the global services PMI. That may be the only monetary move, as I would say.
Yeah, but not really. It's not Friday. I highly doubt it.
Yeah, you may get some excitement, right? I think this would be like a directional move of if the market's going in one direction, if the data supports that direction, then, or just anyway, it just catalyzes a further move. I think it's going to be a very one-sided move week where we're just going to basically pick a direction. And we got the gap fill possibly in play because depending on what these Fed members say, or we can completely keep going up. And I didn't cover this in the beginning part of the video because I did want to talk about it now, how every bear has lost their damn minds. And what I mean by that is the net speculative positions have lost their bloody minds because they're shorting into blue sky breakouts. I'm just like, you guys haven't lost enough money at this point?
Clearly not. They're finding it. They're finding it under their mattress.
I'm more curious where they're finding this money because you spent 2 years shorting the market, pushing the market higher because of every time you capitulated, and now we got wave number. Let's see, 1, 2, 3, 4, 5, 6, 7. Wave number 7. So, is it going to be 9 waves like with Elliott waves or whatever that people like to do? But I'm just looking at this, all right? Like, you go net, right? 0. And I made a video of it's even Stevens playing field. Then 65K, and I said you have lost your absolute minds shorting this much into Powell. You have lost your minds. Get blown out. What do? You add more to losing positions. I'm like, okay, well, time to bet bullish. I can't bet bearish knowing this because I'm looking at it and I'm just saying, unless there's something that fundamentally breaks on the chart, which we covered the levels that you guys have to pay attention to, until those levels are violated, there's just so much bear fuel. This is a recap of when we capitulated from 226K to 0, which was a nice 10% rally. I'm like, okay, are we going to hit 200K this week? It's just insanity.
Yeah.
It's the literal definition of insanity.
And also not to mention that not this week, but the following week is PCE. And again, PCE will most likely follow that of CPI. Meaning, actually, do we have anything for PCE yet?
You wouldn't have expectations at this point. We can look at what previously were, right? So if we go back here, we can kind of see what the next expected week is, right, with PCE. But you got consumer confidence and then PCE, GDP. Ooh, we get the official GDP print for the quarter. That same week.
For Q1 of all things. And, that was going to be really interesting. What day is that?
Thursday.
That's Thursday.
And then
so
Friday,
we'll core. There, yeah.
So the following week, not this week, guys, the next week is going to be pretty exciting at PCE and GDP. I like how they're printing those together right now because it's a really jam-packed week then because that Thursday GDP print and then the expectations going into the Friday print for PCE, and then we start the jobs numbers again the following week after that. So I don't know. We may get stagnation in PCE, remember, because it's a slower metric than CPI, so we really didn't see that stagnation phase from PCE yet that we saw from CPI. So, maybe 2-3 months from now we start seeing PCE come down. But again, this is like the non-volatile one, so it's not really going to move much in my opinion.
Right. And also, I do believe that banks begin to issue their earnings for Q2 that week as well.
Ooh.
If I'm not mistaken. I think.
Or is it the following? Is it the fall? Because they usually.
Let me check that right now. Hang on. Let me
And
check
I love
that
how
right
you
now.
brought up banks, because that was actually the next subject I wanted to segue to was carry regional banks.
Hang on. Let me check that right now.
Yeah,
So the
as you
next
do that,
one,
I just want to
it's
point
in
out
July.
something.
It's in July. Sorry. It's
Yes,
July
the week after.
12th. Yeah,
No, 2 weeks
So,
after that.
2
So
weeks
a month
after,
from
yeah.
now.
pretty much.
All right. But we talked about regional banks, right? And how Powell said everything's hunky-dory. Traders don't believe you, pal, because they have not violated the 200-day moving average on carry twice, right? You now closed below, right? Here was when the 3 rate cuts expectations got revived with the CPI print, and then we basically just gave up all those gains. So regional banks have been going very, very wonky. And I do want to cover one very famous regional bank and what the news they just recently announced. Would you like to guess which one that is?
I'm drawing a blank here.
NYCB.
Oh boy.
So, question, what do
boy.
penny stocks do when they get down low?
Oh boy. What do they do?
Reverse stock split.
Ooh.
So they announced they're announcing they announced a 3-to-1 reverse stock split, which I'm like, okay.
That's real bad. That is real
Well,
bad.
it just showed, well, psychologically playing with you, I'm not under $10, so I can do whatever we want. But it's still, the baggage is still there. You're not going to magically fix the baggage, and the chart's still going to look like dog crap. So,
Correct.
looking at carry, right? Not carry, NYCB. There's just more and more bad news. I've been following this bank since the drop down to basically sub $2. And they're selling assets left and right, and they're not getting better. And also they're being sold. They're selling their assets at like extremely diminished values. So they're just doing everything to stay afloat. This is not a company that you necessarily want to be buying into. And if Powell was right, this stock should have fixed this gap fill, right? If everything was right, if this was so discounted at this level, like you're talking a company that, if we believe Powell, is discounted at 73% of its previous evaluation, and therefore not going back up, is the market doesn't believe the whole commercial real estate and or everything in the banking sector is fine. Yeah, the bigger banks are doing well, but not regional.
But according to Powell, though, in this past FOMC, what did he say regarding the banks?
That they're strong, there's high liquidity and everything.
Yep, everything is fine and dandy.
Yeah, the same thing they said about mortgages in 2008 before the big drop. I'm like, okay, no one believes you, and doing reverse stock splits signifies to me that companies don't believe. Yeah. What they're doing is they're trying to, there's 20 holes in the boat, and they're just trying to patch them at this point. They're not trying to grow. They're just trying to survive. Surviving is not thriving, and therefore it is not healthy.
Correct. And how does the overall fear and greed look like for the week?
So what do you
Because
think
know
it's
how
at?
it ended?
I know exactly.
I think it hasn't moved.
Okay, you were at 48 previously when we last talked.
Yeah.
Are you ready to have your mind completely blown open?
Please don't tell me we're back into like extreme greed.
Nope. Fear.
Oh.
Which makes no sense.
You look at the tech sector, and it does not seem like that.
Yeah, but
It
it's
really
interesting,
doesn't seem like that.
as you covered, only sector that was green.
The only sector that was decently in the green, right?
Yeah,
There were companies and other sectors that were pretty much in the green, but the only sector that was heavy in the green was the tech sector, specifically AVGO, which was the best performer.
And like I covered with Bitcoin kind of being bearish right now, this VIX kind of staying around where it is, Russell not doing too hot. This makes sense a little bit, but it doesn't make sense at all to me, because I'm like, if tech is supposed to be the savior that we're running, right, and this broader rally kind of starting to show up, why is fear and greed basically saying, hey, we're not there yet?
Right.
So it's going to be interesting to track, which means it's a two-sided coin. Like I covered in that speculative positions, this thing can crank all the way to 75. And that's a pretty massive rally. Or this is basically a contrarian indicator saying, hey, the market's lost its dang mind. So throw it in the comment section, guys, what you think it is.
But for now, guys, I think we're pretty much going to end it right here in this episode. Make sure to like, subscribe, comment. Really does help here on YouTube as well as Rumble. Follow us on XFALO Investing, and also follow us on the Discord. I'm actually working actively right now to add the calculator to the Discord. So I'm pretty much just going to remove it from the link in the description, and I'm going to strictly put it to the Discord. Okay. Or maybe not. I don't know. I haven't decided yet. But it is a little bit better to do it on Discord, just in case if y'all got any questions or anything like that, I can answer for you. Also, Mike, are we doing any streams this week? Tuesday and Thursday?
And
That's
Thursday.
what you want to do? Tuesday and Thursday, 7 p.m. Eastern Standard Time, like always. And yeah, I think on my end, guys, I'm going to be focused a lot more this week on your guys' recommendations when it comes to stocks. So leave in the comment section below what stocks would you like me to cover. If you guys are in the Discord, that would be even better. You could just @ me. Please refrain from messaging me privately. I would prefer if y'all, unless it's like something like different than investing, please @ me on the Discord, so that way when I answer your guys' questions, other people can also see, just in case if they have the same similar question. You get me? So just please refrain from messaging us. By the way, my name on the Discord is Tenchi V, okay? So I'm not Mike. A lot of people think that I'm you. I'm not. So, guys, I would prefer if you guys would just message us on the Discord directly. And again, from me, I think I'm going to be doing a lot more this week. Up until bank earnings, I'm going to be doing a lot more your guys' recommendations. So leave me what companies you would like me to analyze. And we'll even bring up the wheel. For all of those of you who are really old here on the channel, we're going to bring that back this upcoming week as well. Mike, on your end, you're planning to do more videos regarding what?
Options, trying to incorporate more option content, and especially talking about like IV and stuff and how it relates to stocks that you guys recommend, and kind of giving you more insight of that.
That works for me. So thank you so much for watching, everybody. Peace out, and we will see you all next time.